Hello, everybody. So today, now that Bitcoin is up a little bit, getting into the new year, I want to talk about MicroStrategy versus Mara and versus Semler, specifically asking the question whether copies of the treasury strategy, of the Bitcoin treasury strategy, whether these copies are actually better than the original, or whether one should stick to the original, to the MicroStrategy original. So anyways, this is not financial advice, of course, but let's get started. So all of these businesses can be thought of as two businesses, really. You have an underlying business for MicroStrategy selling software, business intelligence software. For Semler Scientific, it's selling a medical device, and for Mara, it is mining Bitcoin. That's the underlying business. You make money in this business via the income statement, via the revenue line, the top line of the income statement. That's how you make money. And they have a financial company business model, all of these. They have a business model similar to an investment bank, to how an investment bank makes money, for example. That is, they don't make money via the income statement. They make money via their balance sheet and adding on to their balance sheet either some debt in the form of convertible debt or simply issuing new shares and issuing more shares. So these businesses, not only do they operate, they're an operating business, but they're also an investment business. And the investment business, the dilution to accrete business, that business is the same. It's the same. It's you issue, your business trades at a price to NAV above 1, like 3x price to NAV. You issue new shares. You sold $1 for $3 because price to NAV is free. You accrete by doing that. You generate the yield by doing that. And of course, a convertible debt is just a more advanced way to do that because you dilute, but you dilute 4.5 years later via the option in the convertible bond. In the convertible bond, you had an option. And the big advantage, of course, of these companies issuing convertible bond is that they can collect that premium for themselves. They collect it for themselves via low interest, via a favorable conversion price. So they collect an even greater premium than they do by just monetizing the price to NAV. That's how they make money. All of these businesses do not differ in this, but they certainly differ in this. And today I want to especially focus on Mara and Semler. So let's get started with these two. So first of all, it's shocking how some of these companies can be very low. And one of the questions is, does one of these companies strike you as low, as cheap? MicroStrategy started with a 1 billion market cap in August 2020, and now it's worth 75 billion market cap. So you're talking about a 75x in less, let's call it 4.5 years now. 75x in 4.5 years, right? It went up quite a bit. Semler started in May 2018, 2024 with a market cap of 212 million, and now they're worth 550 million. Mara, on the other hand, started on July 25th, 2024 with a market cap of 5.9 billion, and today they are still 5.9 billion. Which makes absolutely no sense. And the stock of Mara has really performed the least well out of all of the three. And I would argue that the miners in general, even though they have adopted that Bitcoin treasury strategy, they have not performed nearly as well as the non-miners who adopt the strategy. And when you look at the market cap to Bitcoin NAV, you can see that Marathon is looking so cheap at a 1.37x. You're paying 1.37x for NAV of Marathon. Companies like CleanSpark and Riot, they are more expensive. The second cheapest is MicroStrategy, and then the most expensive is Semler. So much of this video is going to be focusing on Semler and Mara because I cover MicroStrategy all the time on this channel. By now, you should know a lot about MicroStrategy. But we're going to compare Semler and Mara, beginning with Mara and asking ourselves, why in the world is Mara so cheap? Why is it trading only at 1.37x Bitcoin net asset value? Why is it trading so cheaply? So first of all, let's value them It all comes down to the undervalued business. For MicroStrategy, not much to say. The software business, it's well accepted. It was worth about $1 billion, roughly. Some people say 800 million, but that's okay. For Mara, though, let's talk about Mara. So Mara says the market tells us that Mara right now, if you look at the market cap, it's 73% Bitcoin and 27% other. Right? Non-Bitcoin is 27%. So really, Bitcoin is fungible. It's sellable. It's easily sellable. You can sell it on the market at any time. So let's remove the value of the Bitcoin from the Mara valuation. So what is Mara without the Bitcoin worth? What is it trading at? It's trading at $1.59 billion. $1.59 billion is the value of Marathon without the Bitcoin. So that's the premium we're paying. And what are we getting for that premium? Well, for that premium, we're getting 1,500 megawatts at a lowball price of $277K per megawatt, which is, I'm using the number from the Q3 call, one of their acquisitions, one of their latest power access acquisition via land. They bought land with power access. They paid the low price of $277,000. I'm assuming that low price that they paid applies to the entire 1,500 megawatt of power access they have. And if you follow my other videos that I've done on miners, you know that the cost of these industrial sites with power access, they trade for the price of power access. They cost roughly the price of power access. Power access is the reason why this real estate is getting sold. So assuming a real estate with power access of 1 megawatt costs $277,000, which is a lowball price in my opinion, that means that in power access real estate alone, Mara owns 415 million. So we're going to have to subtract 415 million from 1.59 billion USD. Okay, let's talk about the mining equipment. Mara is the biggest miner, but they're also the oldest miner. So they have older rigs, but they're also the biggest. So right now, their mining capacity, they haven't published, but I'm assuming they reached the goal. They actually have more than 40, but they haven't published 50, but I'm assuming they reached their goal because they had guided they would get to 50 exahash by the end of 2024, which we are there now. So 50 exahash of mining equipment at 22.7 joules per terahash efficiency. According, and this is the tough one valuing the miners. This is why the analysts, they don't. I just don't think they dig this deep. This is the tough one of evaluating the miners. What is the value of the mining equipment? Mining equipment depreciates really fast. What's the value? Well, according to Grok is taking a holistic cost of install, and Grok is telling me that all of this. Well, really, when you take into account everything, it's about 30 million per exahash, and they have 50 exahash, so it's 1.5 billion. So Grok is telling me they have roughly 1.5 billion of mining equipment, but Grok takes everything into account. They take into account the build-out, but especially the transformers. It's all about the transformers. You may remember an old mining video I did. About 20% of the cost of setting up mining is the transformers, and those transformers really don't depreciate. They keep their value over the long run, the transformers. So anyways, Grok tells me that Mara has about 1.5 billion of mining equipment. Well, that would be insane, because if you were to add Grok's number of 1.5 billion plus 415 million of power access, and you see that the business without the Bitcoin is worth 1.59 billion, so that means the business will be trading at what I would call a steep discount, is what I would call it. Per me, what about me? What do I think 50 exahash is worth of mining equipment? Well, I'm always doing it kind of simple in my channel. So I tried finding a miner that is representative of their efficiency. The closest I could find right now, this is market price right now as of January 2nd, 2025. The closest I could find is the Bitmain Antminer S19K Pro, 120 terahash at 23 joules per terahash. 23 joules per terahash. You can see they have 22.7 joules per terahash. So it's roughly 1-for-1, roughly equal. Right now, these miners' market price are $987. Keeping in mind that they are used miners. And anyways, all Bitcoin miners are used miners. It's pretty standard to buy a used miner in the industry. The trading price is for a used miner. So it's 985 is the cost right now, the going rate for 0.00012 exahash. They have 50 of those. So 50 exahash divided by 0.00012 exahash. That would be the equivalent of 417,000 of these miners. 417,000 miners times 985 per miner. You are at $410 million worth of miners per my estimate. So per my estimate, they have 825 million worth of sellable equipment as of today, land and equipment, power access and equipment, and the market is giving them a value of 1.59. But I'm not going to use my number. I'm going to use the average of Grok number and my number, because I believe I have a low estimate here. They have some very modern rigs in the fleet, as well as older rigs, and I believe I'm lowball here. So let's cut it in half. If you do Grok and my estimate, you put it together, you divide it by 2. I think they have 959 million worth of hardware equipment, computing equipment. So close to $1 billion in computing equipment, $415 million in power access. That's kind of how I evaluate, and I evaluate that power. And so what does that mean? Mara, without the Bitcoin business, is worth 1.59 billion USD, and it's this 1.59 million is accounted for by 415 million power access, 959 million of hardware equipment. So what does that mean? Purely intangible value, the fully intangible value, like the one thing that you buy right now that you cannot sell, is 216 million. So you can think of it as like a premium over salvage value of the business is only 216 million. Again, where is the or I do not understand that. Not only that, but of course another way to value business is to wonder how much money are we going to make with that intangible value. So not only is all of this sellable, but if you don't sell it, if you're going to exploit it, how much money are you going to make? Well, it's easy to calculate. Again, I'm not using their numbers, I'm using my numbers, recreating it. So using a Bitcoin mining calculator and assuming that they have a price of electricity of 3 cents. And if you follow Mara, you know they brag about having gas flares and using the gas flares to pay 1 cent per electricity. You know they brag about that if you listen to Mara. But I'm assuming for the whole fleet, I'm assuming they pay 3 cents a kilowatt hour. Well, each of these 417,000 theoretical mining machines that I have for them generates $1,741 worth of profit per year, which means that you're getting to a business that generates a theoretical profit of $726 million per year over the next 12 months. And what are you paying up for that really beyond what is immediately sellable? You're paying up 216 billion. In other words, your 216 million of purely intangibles, they get outsmoked by the theoretical profits that you can make just operating these machines. And obviously, the profits go down over time as the difficulty goes up. But nonetheless, even if you were to stop the business, sell all of the ASICs for scrap metal in 2 months, you would still end up below NAV with about 2 months, 2.5 months of operating these profits. Mining difficulty goes up, but it still takes a few months for it to make a significant dent in the economics. Clearly, Mara is operating some miners 4 years, 5 years after they bought them, and they fix them. They have their own hardware, their own software. They overclock them. They do a bunch of stuff to extend the life of these miners, and that's the business model of Mara. They say they are a dispatchable compute company. Why? Because they take this mining equipment and they plug it in the US when it's a nice 3 to 4 cents kilowatt hour, and then they move it next to gas flares, and they mine the gas flares next to when it's 1 cent. And of course, if it's the day that these miners are not profitable at 1 cent per kilowatt hour, well, they will still be profitable to a nation state who doesn't pay anything for electricity. And so that's when you sell it, but they're trying to do their best to delay the selling of their hardware. So that's the Mara strategy. I find the stock very cheap, and I've been adding to the stock. The market cap of Mara is essentially all the Bitcoin, all the miners, all the value of a power access, and you only have 260 million of purely intangible, unaccounted for value. If you wait for 2 to 3 months, you recoup all of that in mining gains. It is so undervalued in my view. Is the copy better? I'm not really answering that question. This is a no financial advice channel, so it's for you to figure out. But I know that I've been adding to Mara. I've been buying some Mara. I like the stock very much. Of course, MicroStrategy is still the bigger bag. And now let me move on to a company that I don't own, which is Semler. But I've studied it for a long time. I followed Semler for a long time. But let's talk about Semler and see what I have to say about Semler. So Semler is really the hybrid here because MicroStrategy now is essentially a pure play Bitcoin. Nobody buys MicroStrategy for the software business. Mara is I think still seen as mostly a Bitcoin miner, which is why it's hurting, which is why the valuation is hurting. It's not being valued fully as a treasury company. Now, Semler is the true hybrid because they really have unrelated businesses, one treasury business and one medical device company, entirely unrelated business. Let me tell you about Semler. I've covered Semler before on the channel. I've covered them actually before they add their Bitcoin strategy. Before they did the Bitcoin strategy is when I cover Semler because it was already cheap. So let's talk about Semler. So Semler, they are the maker of a device called QuantaFlow, which is a device that helps medical professionals assess whether someone has PAD, peripheral arterial disease, PAD, which is a common ailment. And so it's this little clip, and you put it at the tip of the finger, and you can assess the disease via the computer. It used to be a very popular medical device, and I'll show you the stock from bottom to the top. The stock did over a 50x. So it used to be a very popular medical device, was adopted by clinics, hospitals. Business was thriving, doing very well, and then the CMS, the Center for Medicare Services, decided to kill the business by changing the billing code and taking them off the list. The CMS is frankly the bane of the existence of anybody operating with traditional healthcare, which is why on this channel I cover HIMSS, because HIMSS doesn't depend on reimbursement. CMS is king. If they decide to not reimburse you, they can really kill your business. And so that's the point here. And so what happens when CMS decides to kill the business? It decides to not cover it. It removes the billing codes or change the billing code so that they don't cover it anymore. Well, typically, whatever company was relying on that to sell a product typically ends up hurting because medical providers revert back to the old way of doing things. And in the case of peripheral artery disease, the old way of doing things is something called the ankle brachial index test, which is a test that was invented in 1950. So they reverted back to a 75-year-old technique, which you can understandably see why you still have a lot of private pay clinics. You still have a lot of state-of-the-art clinics who cater to either people who have a lot of money or to cater to more health-conscious people who just don't blindly follow Medicare. These clinics still implement the system, but they've dropped a lot in sales because now it's mostly people paying out of pocket for it, and the clinics have just reverted back to the quote-unquote free system, which is the ABI test. And, typically they hired a medical assistant, which they're inexpensive workers, and they do this test. It's an old test. And so, yeah, we went back 75 years in time is essentially what it is. Why use computer correlation? Why use AI? Why use the modern technique when you can use the old techniques that uses a finger? And by the way, hopefully the old technique, if the old technique doesn't really work if you have calcified arteries, which if you follow a channel, you may remember Shockwave. That was a company that I think I did something like a 3x in or something. Anyways, there was another company there's a problem with calcification of arteries, and this is like a big thing in medicine. Anyways, doesn't matter. So if you want the old way to work, you better hope you don't have calcified arteries. And you'd better hope that you don't have a very early form of PAD, because if you do, it's not going to show up in the 1950 analog technique, but it would have shown up in Quantaflow. So Quantaflow is still a compelling product. They're still selling it, but it's just that they're now in a valley of despair. The sales are flat. The sales are not too good. The main business is a good product that's just get no reimbursement anymore. And so, of course, what is Semler doing? Well, they have a sales team and they're trying to promote the business on its own merits, but it's tough when all your customers care about is whether they get reimbursed or not. But they're working really hard to get back on the list, and they have a lot of hope that with the new administration, they will be able to get back on the list. And they're also expanding their device to try to treat other arterial conditions which would be or may be eligible for reimbursement. So it's a very political process, political business. It's all about trying to get on the list. But they still have state-of-the-art clinics and doctors who use their product. Anyways, this was a very successful product, which is why I think there is still a premium into the stock because of the product itself. And to give you an idea of how successful that product was, I just went back 10 years ago. If you do 10 years ago randomly here, you can see the stock was $2.60 on January 9, 2015. Today the stock is $53, and that is after the insane drop from the 150s. It peaked near 150. So at one point, this is a stock that was nearly a 70x your money. And then of course you can obviously spot exactly where the CMS said, "Up, no more. We're killing your business, buddy. We're not interested in you having a great product. We're more interested in saving money." And then they stopped paying for it. And it's incredible, really, to show that despite them being off the list, which is usually the death of a company in that sector, they still have outperformed the NASDAQ. They're at nearly 21% average annual return since 2014 versus the NASDAQ at 18. So they still have outperformed the NASDAQ. And that's not meaningless. If you had put 10K in 2014, it would be 77K on Semler. And if you had put 10K in the Nasdaq in 2014, it would still be 62,000. So that's why I say the numbers don't lie. This was a blockbuster product. This was a compelling product, and I could have nitpicked and shown you the performance before it was off the list of the CMS, and you were at a performance much more in line with, say, a Tesla, for example. So anyways, kind of like MicroStrategy, right? This is kind of the story of MicroStrategy. You have a single product. You work so hard on your single product. In the case of MicroStrategy, it was big tech. Big tech hurts their business. Big tech just updates their software and takes their business away, right? And in the case of Semler, it is CMS just updating the billing codes and taking the business away. So you can see the defensive nature of putting Bitcoin on the balance sheet. And if you follow MicroStrategy, he went from being defensive to being offensive, right? And to being, upset about the whole system and the whole financial situation of cash is not doing anything for you. You gotta hold the Bitcoin because cash is killing you. Cash is draining you from your past success. You cannot save your success and teleport it into the future. So Semler was in the same situation as MicroStrategy. They had a bunch of cash. They had a decade of success, and then an outside factor made it so that they stopped being successful, and they're like, okay, well, we want to survive as a company. And buying back stock doesn't really do much for Semler. You can see how specific the product is. The product competes with a analog use your hands system from 1950. Like there's no acquiring another company was not really an option for them. That's why they went for Bitcoin wave, Bitcoin strategy. Anyways, I ramble. Let me move on and talk about the valuation. And this is why I say Semler is still an expensive stock. Okay, so without Bitcoin, and I have two valuations here. I have one valuation for Semler with the Bitcoin, and you can see it looks much more expensive with the Bitcoin than without the Bitcoin. So without the Bitcoin, if you remove the Bitcoin, it's really a $330 million business. That's what it is, $330 million business. So market cap is roughly the same. So really, without the BTC, Semler is trading at an enterprise value over revenue of almost 5.9, and it's trading at an EBITDA of a 15.566. Now, for a business with flattish to declining sales, that's cheap, but that's just okay cheap. That's not really dirt cheap. I tried to find a sluggish medical device company to compare, and that would be GE as a spin-off for medical device. GE, their sales are essentially really flat. It's not going anywhere, just like Semler, and they're trading at about a 12x EBITDA. So it's a little higher, but that's because the market hopes, I believe, that QuantaFlo will do a turnaround. There's a lot of hope about that, and it's justified by the past performance. So I think that price can be explained by that. And keep in mind, because they make money from the business, you still have an implied yield of 6.5% a year of BTC yield implied, right? Because that EBITDA, my proxy for cash flow, it's a proxy for cash flow. What are they going to do with that cash flow? They're going to put it into Bitcoin, because they're not going to do an acquisition. They're going to invest a little bit in sales, try to renegotiate with the CMS, but that's not going to cost a lot of money. They're trying to move the device and change the device to be served for other heart problems, but that's a software update. That's a software improvement. That's not a major hardware improvement. So one can count on that yield, that built-in BTC yield of 6.5% already from the business. And again, that's some say that may not be enough to justify a premium. What may be enough to justify a premium, on the other hand, is, and this is kind of counterintuitive, but it's when you look at the price to NAV. When you look at the price to NAV of Semler, they are at 2.72. So they're essentially where MicroStrategy was 6 weeks ago. So what is it that happens? And they have an ATM going on. They have about 50 million on the ATM going on. They recently increased it. So what happens when Semler does the ATM is they do the ATM at a 2.72. So it's much more accretive to do that than to do it as a Mara who does it at a 1.37. Because if you do an ATM at a 2.72 price to NAV or market cap to NAV, what does that mean? You issue $1 million at a 2.72x NAV or 1 million shares, right? It's like selling $1 bill for $2.72. And of course, you dilute by $1, but you get 2.72. So you do the difference and you accrete 1.72. You generate that yield for your shareholders at 1.72. So the BTC yield, the Bitcoin yield and Semler could very well be outstanding going forward, thanks to the underlying business propping up the stock's value, right? What if there is a very good news on the QuantaFlo business and you still have analysts who follow it as a medical device company? What if there is a great news and QuantaFlo is added back to the reimbursement system? Well, then the stock could shoot up. And if the stock shoots up, then you get maybe a 5x or a 6x NAV, and then Semler can just go around and dilute, insanely dilute, and maybe if this stock is trading at a 6x price to Bitcoin and NAV, maybe you're selling a dollar bill for $6 all of a sudden. So that's a very powerful strategy in my view. I listened to a recent interview. If you listen to the Saifedean interview with Semler, the chairman of Semler, you can see that they plan on doing more ATMs, and they especially plan on doing convertible bonds. They are following the MicroStrategy playbook, and they will be able to do convertible bond because the stock has had a lot of interest, and there is options trading opening up on the stock. So they will be able to have more volume, more volatility, and volume plus volatility equals very favorable terms on convertible bonds. So Semler is a mini MicroStrategy. It is more expensive, but why is it more expensive? Because much of the valuation of Semler can still be explained by the underlying business. The underlying business trading at a 15x EBITDA can still explain much of the valuation of Semler. In fact, 330 million enterprise value in Semler is due to their underlying business, and 530 million is the total business. So about 2/3 is the medical device company. About 1/3 is the Bitcoin strategy. That may change in the future. Nonetheless, the problem is with a CMS is nobody can predict where this is going. So I still find it a little too risky for me. There might be some hope that they will get reimbursement back baked into the number. So that's why I'm staying away from this one. But anyways, hopefully that answers some of the questions you may have about these three and comparing them. MicroStrategy is my favorite play. Out of all of these, out of all five, really, that I cover, it's my favorite play by a long shot. But if I were to pick the cheapest play, it would be Mara. But Mara comes attached with the risks of being associated with other Bitcoin miners. And Bitcoin miners, sometimes the market say mining bad. And if this market says mining bad, then you end up with your own volatility. And the prices could stay depressed on the miners for quite a while, in my view. Anyways, this was not financial advice. Not investment advice. This is just entertainment and fun, and I hope you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you so much for watching, and have a wonderful, wonderful day.